On the surface, Google looks like the cheapest of the Magnificent 7 stock with a forward PE under 24. Amazon's is 30, trading around $220. So Google is the better deal, right? Unfortunately, it's not so easy. Simple PE is misleading and Amazon is cheaper than it looks. Today, we are putting the stocks head to head to see if Google, the king of value of the last year, has been flipped by Amazon. What's the best deal, Google or Amazon? I'm thinking about it all the time because for me it's a personal dilemma. Google is my biggest position, 250 shares for over $60,000, while I have no Amazon, zero. Should I sell my Google and flip to Amazon? Does any one of you have the same doubts? Let me know in the comments. Not financial advice, as you can see, this channel is different. Banana with sunglasses, no tie, no fancy watch, nothing should be taken too seriously, not even finance. I'm happy to look like a clown if I get it right, and I'm much better investing than juggling. So let's start with the charts. I was buying Google this year around 155, believing the stocks should be trading at all-time high. 6 months later, it is consolidating at all-time highs.
Pretty good.
Instead, Amazon not only is still below its February peak, but it hasn't done much since 2020. I mean, yeah, it's up 30% in the last 5 years. 5% a year are not magnificent return for a Magnificent 7 stock, but during this time, revenue more than double, 15% CAGR. So valuation went down. A lot of this growth is thanks to AWS, which not only has quintupled its revenue, but has much higher margins than the retail e-commerce. Pretty good. Like always, I invite you to research more, but look, AWS is growing. Revenue is up. Gross margin are expanding. Operating margin are expanding as well. Amazon deserves to be at all-time high, not just a bit higher than 2020. By the way, did you know that Jeff Bezos was one of the first Google investors? In 1998, he invested $250,000 for astronomical, mind-blowing returns. Google, let's be fair, it's also an incredible company. In my opinion, is still a bit undervalued. As I say in this video, I have a target price of $300. For over a year, we heard this crazy story that AI will destroy Google search. While Google is probably the most advanced AI company in the world, now with Nano Banana, investors are finally realizing how powerful and advanced are their models. Nano Banana make me look like a clown. Nano Banana, I miss my hometown of Florence, bring me to Ponte Vecchio. Looks like DeepMind, Google AI department. It's working pretty
good.
Now, every Mag 7 is spending a huge amount on capex for AI. Okay, except Nvidia, they are just cashing in. And I would like to know your opinion, but I believe it's money well spent. Over the long run, 10, 20 years, I think it's a good investment. But while Google will have to find a way to monetize it directly to consumer, I think it will be easier for Amazon to benefit from it. With AI, they will just cut costs and improve operational efficiency. If we consider that Amazon's revenue is almost double Google's, just increasing profit margins by 2-3% using AI, robotics, delivery bots, drones will make a huge difference in profits. Considering all this and everything else that we already know about these companies, that I'm not going to repeat because I don't want to bore you to death, if you are like me, you just want to know, Adri, who is cheaper, Google or Amazon? So I apply the value ratio, my indicator, the results. It's a tight battle. Regarding growth, I believe the two companies are quite similar. If I would be forced to bet, I believe Google will grow revenue a bit more than Amazon, maybe 1-2% extra. On the other hand, Amazon in my opinion, it's a bit safer than Google. AI will not replace Google, but I believe there is a little bit more uncertainty about how search will look 5-10 years from now, compared to the strength of the retail e-commerce business of Amazon and the very strong moat that they have there. So don't get me wrong, both companies are quite safe, in my opinion, but Amazon it's a bit safer. So growth and risk are basically at high. It all comes down to margins. Google operating margin seems quite stable at 32-33%, while Amazon margins are improving. Could they keep going up? I think they could. I'm projecting some margin expansion, and this makes a difference. So after crunching all these numbers, the results are almost unbelievable. Today, my value ratio shows that Google and Amazon are almost identically underpriced, trading around 25% discount compared to the rest of the market. Please be aware the stock market in general is quite expensive. The battle for the cheapest Magnificent 7 end up at the photo finish with no clear winner. So, what am I doing? Absolutely nothing. I own Google in my personal account and I will have to pay a big capital gain tax if I decide to switch. So, at the moment it's clearly not worth for me, but your situation might be different. Maybe you don't have to pay capital gain, maybe you are just deciding what to buy, and in that case, you can split the money and buy both. At this point, I really like them both better than other very popular names like SoFi. For example, if you want to know why, just watch this video. If you subscribe now, you will forever be one of my first 1,000 subs. This offer will not last for long. Thank you for watching. Peace out.